Good morning, I'm Carol Harmer from the International Trading Institute, and two things have popped up on my little radar this week, and it's only Wednesday, but oil. So what I'm going to do is I'm going to show you some oil charts. Oil is a bit of a monster to trade, understandably, but you can get some really good moves in it if you trade strategically and you look at what the market's looking at. So what I'm going to do first is put you over to the weekly chart so you can see exactly what I mean, because obviously this is interaction, but I'm interacting with myself. But my focus is to get you out of the 5-minute chart noise, and make you into professional, profitable traders. So I always used to say, if I can do it, anybody can do it. 4 decades later, I'm not thinking that. But I do think that the education has been missing for 15 years. And this is what ITI and FX Street aim to put right the wrongs of the last decade or so. Anyway, not to bore you, we'll go straight to the oil chart. Now this is an oil chart of light crude futures, which is probably the one that's traded the most in America. Now obviously you can see in 2022 oil spiked, and you can see that it reached a high of 130. Now when it corrected and went back up, you wouldn't necessarily have been selling on that week, but you would have been selling on that one because your indicators were showing it. There's loads of other things with oil that I won't get into now, but there are, oil is a separate animal from most of what we trade. I like it. It went through the 200-day moving average up here, and you see that when it went back up, it kissed the 200-week moving average, and the rest is history. So these are the things you're looking out for on the longer term charts. So if we take a look at the daily chart now, which I've scrolled through before speaking about it, you can see quite clearly, hopefully you can see quite clearly, you can see quite clearly that really we stayed in a band for this period of time, and then we started to come down this pole here. This was a corrective bear wave. Look how we didn't break the 200-day moving average. Okay, you had natural chart resistance up at these higher levels, and when you see a market close on the high and you eyeball it across and you see that there's a lot of resistance there, which was support way back in 24, you've got to do your homework. It's so important that you do your homework, because you would miss this and the smart money doesn't. So even though on that day it closed higher, it was the start of a bear run. Now we broke through this support here, but we went back up, and we call these continuation patterns. Obviously as ITI grows, I will go through the patterns with you, but you can see, you can feel that it's going back up, not breaking any levels on the top side. So when a market doesn't break a prior resistance, alarm bells should ring. Stochastics were at overbought levels. That's just another added bonus. And as you can see, oil is now trading down at 57.85. Now, the natural gas is another lovely little market that I like. So, as I say, I'm going to first take you to the weekly chart on natural gas. And you can see quite clearly here the same sort of thing happened. You know, the market looked bid, but when you get a low, a higher low, a higher high, and it closes at the lows of the day, you know, this is where spookiness comes into it, because markets don't normally make new highs and then close at the lows. It's a psychological thing, and trading is so much about psychology. So, you know, you can see either the buyers will go, oh great, it's gone up, I'm selling, but they're not looking at what the actual chart is telling them. And they do tell you a story. You've just got to be open to the story that they're telling you. So there was the weekly chart, and really, we didn't do anything. You know, we sort of basically went up. We didn't do anything drastic until this week. And so, going back to the daily chart, you know, it was really just this week that oil started to motor onto the downside, you know, and is still going. So what we're going to do, I'm going to show you how I would put on a Fibonacci level, okay? I would take it from that point there, which was the beginning of the bull run. I'm taking it up to there, which was the high. And we've gone through the 61.8. We're on our way to the 78.6. Okay? Now the 78.6 is coming in at $294.2. So be aware that this level is going to be majorly important. The reason that it is important is because markets correct, they do, and they stop at strategic levels. That is what you can see, what I just showed you on the weekly chart. They stop at strategic levels, and you need to be aware of where these levels are. You can't just close your eyes as you see it going down and chase it, because you're going to be a sheep. You know, and what happens with sheep? They get slaughtered. Okay, so there were indicators that if you were up on technical analysis and charting, that enabled you to see that the market was making a top. I mean, I read patterns into that could be a head and shoulder. There's the neckline. Returns to the shoulder. Doesn't do it. Goes through the moving averages, and down we go. Could gas go down to the 200-day moving average at 263, which is the 26 point, which is the 100 point fib level? 200-day moving average is at 260. Could we do that? I don't see any reason why not. The stochastics are still pointing lower, although they haven't changed to go bid yet. And as I say, they're only used as a guideline, and what you want to do is just incorporate those indicators that I'm showing you. I'll show you more tomorrow, but incorporate those indicators so you get the bigger picture. You're not just sitting there with ladders, okay? You're actually beginning to read and understand the market. And unless you do, then unfortunately you will be in the 80 to 90% that don't quite make it. And that is no disrespect to anybody out there. It's the educators that should have done this for you many years ago. As I say, we're trying to put that right now, really. We're trying to put it right now because this is going to carry on, you know. I'm not going to be around forever, and I just need to know that I did all I could to teach you how to trade in the proper way, as opposed to being caught out, you lose your money, and you would have made a good trader if you'd have, just sat back a little bit and had a look. Anyway, that's me done. I may come on and do the US markets a bit later. Depends how hot it is and what I'm doing. Okay? But if not, I hope to see you all tomorrow at ITI's first webinar. And we are hoping that you're going to enjoy it as much as we've enjoyed putting it together for you. Okay, good luck for today, and I will catch you all either this afternoon or tomorrow.